Or more appropriately, of course, good morning, good afternoon, good evening, depending where you are on our little blue globe spinning in the cosmos. Today's topic is Long March to Disunion, Britain, EU, and the markets. This probably is one of my favorite type of topics here. It exists at the, where its importance is not any one thing, meaning it's not all economics, it's not all politics, and there's more than a small admixture of culture. It exists, how this plays out, at the junction of all three. And the way that it is enacted will depend on far more, will really depend on what concerns are utmost in the minds of the decision makers. As always with these webinars, if you have any comments or considerations, please put them in chat, and I'll be glad to respond. I have the chat in front of me. As always, I solicit jokes. If you have any jokes, since I'm not terribly funny, please add them as well. And I will send my email address out at the end of the session if you have any comments or criticisms or requests. And I do have a few requests for specific topics, which I have not gotten to yet, but rest assured that I will, certainly before the year is out. The new topic for each week, I do this every Monday. It's usually up by Friday, sometimes Thursday, but usually Friday on the FX Street site, their webinar listing site. Okay, so our issue, this chart in front of us, and the question that I posed, of course, has an immediate answer, but I thought it was an interesting way to approach this particular topic. If we go back a few months, I think we can all remember the shock, there's no other way to describe it, of the vote of the British people to leave the European Union. That is a vote bounded or controlled, if you will, ordered by considerations far beyond the simple economic analysis. The interesting thing about the curious thing about economic analysis, everybody talks about it, but very few people actually vote based on what would be considered by journalists, by all sorts of technocratic experts, an analysis. And what's also interesting is that the vote of the uninformed, as our President Lincoln called them, the great unwashed, I believe, although that's not meant to be an actual comment, is that the experts in all of their educated finery are no more often right than the general run-of-the-street voter. Just here in the United States, if we look at the pinnacle, supposedly, of our economic experts, those who reside on the board and the staffs of the 12 Federal Reserve banks here in the United States, the creme de la creme of their profession, and their predictive abilities are woeful. They're never right. They're always over-optimistic. They are as affected by their own bureaucratic imperatives as anyone else. So the view of Brexit from the heights of journalism and academia are unlikely to be any more correct although better expressed, certainly, than the general run of the voter. Which is why this was such an astonishing shock to, well, primarily to the EU, although to Britain as well. Okay, so that little aside. What we're looking at here is a chart of the two very different directions that the British economy, as represented by the FTSE 100, and the pound against the dollar have taken. Now, of course, there's a mediating factor, which I mentioned, and it is rather explainable, but not quite. The mediating factor, of course, is the projection on interest rates. If you look at it, and I have a chart for it here, I mean, I would show it to you here, but it shows throughout this period here from the financial crisis at 0.5%, and then it goes down to 0.25%. And the British raised their purchasing, BOE purchasing a little bit as well. So there really isn't anything substantive in that current state of what the BOE is going to do. But what they're looking at, of course, is anticipatory, as always. And here in the United States, there is yet again, and this has got to be the lamest topic in the current markets. What is the Fed going to do? You know, whether they raise rates in November, which they're not going to because it's before an election, or December, are almost irrelevant because it's never a particular rate increase. What really matters is what a rate increase used to represent, which was a counter-cyclical interest rate policy by the central bank. A year ago, or almost a year ago in December, the Fed projected, I know they said it wasn't a projection, but of course it was, that they expected to raise rates 4 times in the next year. They didn't. Markets and the world economy had a different idea. And the world economy was, and the credit markets were far more accurate in their assessment of Fed nerve and economic reality around the world. So once again, we're looking at the Fed and a rate increase in December. And it seems like they will. I mean, they sort of have to at this point, but it doesn't matter. What's important is the cycle, what happens in 2017. And I have yet to see any projection that the Fed's going to run off and start raising rates to we're at a 175 by the end of the year. I don't believe it. Same issue here for the UK. The markets are responding to what the assumption is, the operating assumption is on the BOE's response to Brexit. I try to avoid all of these neologisms, is the technical term for them, newly coined words, as in Brexit. But this one just fits, and it makes it so much easier rather than saying British exit from the European Union. I say that enough times, I'll get through the webinar and without having to say much else, and I want to do that. So the response of the assumed response of what the BOE will do is based on what? It's based on exactly the type of assumptions that have gone behind the Fed's misunderstanding of the US economy. The BOE is assuming as a precautionary, and the markets are going along with this, that this is going to be damaging for the British economy. That's their assumption. That was the uniform assumption. The BOE came out with all these papers. It's going to be terrible. Well, maybe. On the other hand, maybe not. Just look at this chart in front of us. If it was really going to be terrible, then what is the FTSE doing up there? Even if you're going to have low rates, but low rates were a project anyway. The assumption that the BOE is not going to raise rates for the foreseeable future was an assumption before Brexit, and it hasn't changed. It's still an assumption. So there isn't any real change of paradigm here for the FTSE. There isn't. Yes, it was 0.5% before, and now it's 1/4. But as with the Fed rate cycle going into next year and the year after, there isn't any anticipation that this is going to be any different than it was before. So you could say that the BOE, the stock market in England, the FTSE, is responding to the anticipation of lower rates longer, but that's no different than what was before. Longer when? To 2025, to 2090, longer when? There already was that assumption in place beforehand. So it looks to me that there is an additional factor here. Now, one of the additional factors, of course, is staring right at us. Britain exports a lot. There is a change in the economic view, and it has to do with a huge devaluation of the British pound in terms of trade, mercantilism, all the good stuff, that we assumed was completely outdated and suddenly comes roaring back to be a consideration of the voters and public policy. So that is a new factor. Interest rates is really not a new factor because it was already there. But the pound falling from almost 1.5 to 1.24 is a new factor. And as the pound sank, the FTSE went up. So clearly, economic prognosticators in England are looking for a serious boost to the economy from improved terms of trade. Now, the Europeans, my guess is more than anything else, this annoys the Europeans because they were what they've been trying to do is exactly the same thing, or they didn't achieve it very well. But they're trying to devalue their currency. Actually, everybody is trying to devalue their currency. Oh yeah, excuse me for, oh yeah, I apologize for that. I just want to put this up. Don't anybody say anything. China was on a holiday last week. I don't know what for. This is the Chinese, I'm going to mention this in passing. This is the Chinese yuan. 6-year highs yesterday or this morning in Asia when the Chinese reopened. You can't see it here because I wanted to get a long-term. A nice sharp run right there, shot right up. This is a planned, calculated, standard devaluation. What do? They devalue, then they get a lot of worry, they let it go down again, and they shoot it up. I mean, there's the same pattern over and over again here. This, we should all remember, tells you more about what's going on in China than anything else. Okay, BOE target rate, is that interesting? It is not, but I'll put it up. Okay, the BOE target rate. They dropped the rate, they raised the bond purchase a little bit. We all know that it's hardly a useful signifier. That's the word I'm looking for. Okay, there we go. Okay, so back to this target. Yes, it most certainly does. That's a very good question. Another reason, what is Britain going to get from this? Capital inflows. What are capital inflows good for? They only go for 2 reasons, maybe to buy stocks because they think they're performing well, and also for investment. Think about it. If you are a European manufacturer or European service, all of this worry about the financial industry leaving Britain is, in my opinion, nonsense. Why is that so? Because who would leave a relatively lightly regulated and effectively regulated, I think, regulatory environment for the ever-rising, ever-crushing regulations on the continent? So in fact, it's my view that you're going to get movement the other way. Same thing with manufacturing. So I think that both there is going to be, it does make investment cheaper for foreigners. If you mean that the financial industry will leave Britain, I would agree with that. I do not think it's going to go. I cannot see a bank or an investment house or a hedge fund choosing to go to a much more highly regulated environment, where the regulations are not even set by the national government, but they're set by essentially unelected bureaucrats in Brussels. I just don't see that as a choice. It would certainly not be my choice. I mean, we're a partnership here. It would not be the choice of our business to operate in that way. It just makes things much more difficult. So yes, I think that it will end up being a boon in both areas, both for British manufactured products and services product. I mean, if you're contracting services, they're suddenly a lot cheaper in Britain. Financial services, a lot cheaper in Britain than they used to be. All good things for the British economy, reflected in the FTSE. Okay, so back to it. So the standard view, which British voters rejected. Again, I want to keep emphasizing this. In much of what you read here in the United States and around the world as well, technocrats are praised. They are assumed to have the answers. This is simply not true. If you're building a bridge, yes, you hire an engineer. If you're ill, you go to a doctor. But for social policy and certainly for economic policy, there are choices. There are not really solutions. What you count as important when you're looking for the effect reflects and changes your policy. So we're dealing with a different order of inputs and outputs. It is not the linear approach of the physical sciences. It's all rather cliche to say it, but I like to point it out because we tend, I think, as cultures, to have an overrated opinion on what can actually be achieved through public policy on the economy and the social sciences. I'm saying that leaving aside the physical sciences for an obvious reason. Okay. So the markets are telling us that the exit of the British economy from the EU is not going to be a bad thing. That's what they're telling us. I mean, that's the view right here. As I said earlier, and I'll just repeat it, this is not simply, I posed the question deliberately, this is not a reflection simply of lower rates for longer, because that was already the assumption. This is a reflection of changed environment. Okay, so we have the original dichotomy that I posed. Can Brexit be both good for the economy and bad for the pound? And I think the answer is obviously yes, it can and is in front of us. The normal, well, we're going to have soon there's going to be, I think, a division in the economic literature based around the financial crisis and the recession that followed. Yes, that's true as well. The Japanese did this when they devalued the yen by about 60%, and inflation shot up, but it came off. It tends to be a one-time thing. So it does not really affect currency fluctuations are of course reflected in the inflation rate, but they're not really affected the underlying inflation rate. Once you get that big shock, it then tails off. There's no more inflation. Okay, based on that. Okay, so the difference. So we do see a situation here where an event such as, or a prospective event such as the British exit from the European Union is both bad for the pound and good for the economy. Okay. That's the fact where that's the economic situation where we are now. So let's take a step further. Everything we've seen so far is speculation. Now, that's what markets do. They speculate. Okay, that's what they're supposed to do. They have given us their answer. But they don't know. So where are we moving to with this? And this is where I said why I find this topic so interesting, because it is at the intersection of economics, of politics, of culture to some degree. So let's try and think how this plays out. What are the factors here? On the economic side, it seems obvious. I mean, Britain and the EU trade a lot with each other. I think the EU is Britain's largest trading partner. I don't think Britain is the EU's largest trading partner, but it's one of the top ones. I think actually, I'm not sure. I don't think it is. For both of those parties, European Union and Britain, United Kingdom. Now remember, just an aside here, do you remember when the Brexit vote went through, one of the things that was spoken about endlessly is that if Britain voted the United Kingdom, Northern Ireland, Wales, and Scotland, voted to leave the European Union, then the Scots would vote to leave the United Kingdom. And what have we heard since the vote? Silence. I never thought, and I said so at the time, that this would prompt the Scots to leave. So far, we have seen nothing. The Scottish National Party does not seem to be pushing it at the moment. Now, you can make the argument, of course, that they're simply waiting to see how it plays out. But I think in the long run, if the Scots have to choose between being under and participatory in Westminster or essentially under the control of European bureaucrats, they will choose Westminster. We shall see. So just put that out there, because that was another one of the items that were used against the British leave vote, which turns out to be, at least so far, wrong, untrue, clearly polemically intended from the beginning. Okay. So clearly from an economic point of view, it appears, and I don't think this is very controversial at all, that the best course for the British economy and the European economy is to continue more or less as they have been, since it's very beneficial to both economies. Okay? Now, let's just take a look at some of the, I'm going to go through this very quickly because there isn't a lot of information yet about. So this is industrial production, okay? Just go through these quickly. Industrial production, that's the Brexit vote there, June, you can see more or less where it is, has seen a relatively sharp fall. It also went down here and here. So whether this actually means something or not, we don't know yet. Okay, that's industrial production. I'm going to go through these quickly, as I said, because they don't have a lot of information for us yet, frankly. And they're not going to for some time. CPI, yes, came off a little bit here, partially related to you would expect, that there would be more of a boost to inflation, but there hasn't been yet, okay? So those are the ones that I brought up. Let's look at these. These are more sentiment numbers because the only thing that's going to tell us anything at the moment is sentiment. Although these are orders. These are Council of British Industry total orders. Again, not much information, down a little bit, leveled off, we shall say. Let's look at some of the sentiment numbers, just so we have an idea. It's manufacturing PMI. Needless to say, manufacturing outlook is glorious. Here's June. Emotion and then skyrocket. Why? That's easy. That's the pound. Cheaper pound, more goods sold. Look at services PMI. Same thing. These are the Brexit, the economics out of London. Similar thing. June down, up, same for the same reason. Services price cheaper, you get more of them. Okay. Retail sales. Now this is a slight. It's not much information. It's really 2 months, but it's an anomaly, shall we say? As we noted earlier, import prices must necessarily rise. There isn't any question about this. They must necessarily rise with the enormous devaluation of the pound. And we have retail sales going up. Now you can make the argument that before that was immediately reflected in goods prices, people went out and started buying things. I mean, that's possible. I don't know. I remember one time I was in Dublin and we were buying, this is 10 years ago. And I was buying some maps in a map store. And I'm looking at the prices and they don't seem right. There's a little symbol beside them that I didn't know what it was. So I went to the manager, the owner of the store, a man named Andrew Law Bonar, who was in fact a descendant of a former British prime minister back in the early part of the 20th century. At any rate, why were the prices so odd, I thought? And he said, well, I've never changed the labels. They're still labeled in Irish punts. I don't remember what the translation was. So he had never changed. So maybe you have a similar item here that everyone out and bought stuff before they repriced it. I'm not sure. Consumer confidence. This I find far more interesting. Confidence and sentiment number. Clearly, let's wait and see. So there is no immediate effect in Britain other than that manufacturers and others start to see that they're going to have some good effects. Okay, so now we're going to go back to the general conversation. So we'll bring this up. There aren't really any charts for a lot of the general stuff that I'm going to talk about, so I'll leave this up here. I'm going to talk primarily about two areas here. I'm going to talk about economics, which we just gave a run through, at least from the British side. And then I'm going to talk about politics, because this is going to be, I think, it's going to be an interesting, I don't have an answer how it's going to be, but I think it's going to be a close run issue. So let's examine it. From the economics point of view, trade, exchange of goods, tourism, services, the freest trade possible between the economic areas of the UK and the EU. Oh, this is the wrong one. This is the one last week. Hold on. I know I put up two, because since I made the last chart on Thursday, which was the prior chart that I put up on Thursday, the pound has fallen another 300 points. So here we go. So from the economic point of view, it's going to be very difficult to make an argument that that raising protectionist barriers over goods, over services, over travel is going to benefit anybody. You can't make the argument that it would benefit let's take it because if it's going to be someone, if one side or the other in this negotiation, we're going to assume peak. After all, to use an emotional analogy, this is a breakup. It's a divorce. But it's not an amicable divorce. We're reading someplace, in every relationship, one party is the lover and one party is the beloved. We have something like that here. Britain's clearly the beloved, and the Europeans are clearly the lovers. They don't want Britain to go. Britain said, we're going to go. This is a contested divorce from the British side. They are seeking the divorce. So if there's going to be a party which would, for, you could say emotional reasons, simply an emotional reaction, want to inflict upon the other party, it would be the Europeans inflicting on the British. But what particular, then emotionalism aside, politics aside, which I'll deal with in a couple of minutes, but from an economic point of view, how would it benefit the Europeans to impose tariffs or charges, protectionist barriers against Britain? Because what would happen? Well, the British would turn around and do exactly the same thing. So Germany, being the dominant exporter, 50% of its GDP are tied to exports. I don't know what percentage of those go to Britain, but having been to London many times, there's no shortage of Mercedes or BMWs or Audis. So there isn't any real, aside from perhaps the very strong emotional desire for a little bit of vengeance, there isn't any real purpose to restricting trade. There simply isn't. Now you can make a different argument. Now that doesn't mean they won't do it. And there is a strong argument for it happening, but it's a political argument. I'll take it in a second. But from an economics point of view, as well, the second largest economy in the EU, the French. Paris, the city of light, a truly beautiful city. A charming destination. The British have been vacationing in the south of France for hundreds of years. A weekend jaunt to Paris it's like going to DC here. It's even quicker. And I mean, nobody goes to DC for a vacation anyway. There is no reason for the French to attempt to restrict this type of exchange. It will cost them money. More people in Europe go south for vacation than north. The Italians don't go to Scandinavia for August. The Germans don't go to Finland for their vacation. They go south, or maybe France, but they certainly go south, and that's true all the way across the line. So for Britain, or for France, to start restricting this out of a fit of pique makes no sense economically. And this is true for every other country in Europe. Britain has a very successful, it has the most dynamic economy in Europe. Its people are great travelers. So the purpose of any pending restrictions is clearly not economic. Okay, so now let's move to the other topic, which is politics. And in this case, I am not sure how this plays out. You have the emotional side of politics contending with the far more rational side of economics, of free trade. So let's examine this. The European Union, in its concept and in its execution, certainly in the last 15 years, and I've written about this many times over the past 5 years, actually more, the past 10 years, is an entity founded in politics. It is primarily, and was conceived as such, as an institution, an organization of human society, to prevent a second 20th century in Europe. That's its purpose. Its purpose is political. It's political-cultural, if you will like. It's to bind the European countries so closely that they can never do again what they did twice in 25 years. 1914 and 1939. Or as Churchill called it, the Second 30 Years' War. It is hard for, I think, Americans and many other people around the world as well, I think, to appreciate the emotional, and I don't pretend to, the emotional trauma of those two wars. So that is the purpose of the European Union. And everything else was an afterthought. The problem is that nations and the peoples of nations feel their primary allegiance on a political level to the nation state. Germans are Europeans, but they're primarily Germans. The French are Europeans, but they're primarily French. This is an aspect of human society that the technocrats are loath to consider, and I don't believe understand. But in democracies, these loyalties and emotions have an outlet. After all, much as it might like to be so, Brussels is not an imperial capital. Brussels does not have an army to send to Britain to keep Britain in the EU. The Romans responded, at least for 400 years or 350 years, to rebellions in Britain with force. The EU can't do that. So on the political topic, I mean, the vision of the founders, Jacques Delors and others, of the European Union is the ever closer union. And their goal was understandable. I'm not, and I don't believe, that there is some nefarious world order waiting to be enacted here through Brussels. I've never been to Brussels. Have I been to Brussels? I think I was in the airport, but that's it. I've never been to Brussels. Although there are food trucks on the New York City streets selling Belgian waffles and other things. That's a recent innovation here. I don't know if it is a Belgian entrepreneur fleeing Brussels regulation or it's something else. But anyway, they are here. I see them in my old neighborhood occasionally. Anyway. So the view of the people, both the national politicians in most cases, but not all, and certainly the functionaries, the bureaucrats, the technocrats, the people in the ministries who make this happen on all levels. This is a unalloyed good. It's also what they do. So they're all disposed to believe that. Now, I'm not, I read an article before coming in here, and that was, yes, the Brexit vote won, but it doesn't represent really more than half the people of the United Kingdom. That's actually true. It's not actually true, it's simply true. So democracy is about the only method we have of well, not really adjudicating, but of deciding these types of questions. But they are necessarily somebody anyway, it's the best way we had so far of determining questions like this, because there are no right answers. There's a very good argument for staying. There's a very good argument for going. So the decision simply has to be made. So there we go. So the purpose of the European Union is at essence a political purpose. And there are two problems with this. Well, there are three, actually. One, is that goal necessary? Are the European politicians now fighting the last war? I think they probably are. Two, how do economies grow, unite? The reason capitalism works as well as it does is because it is a long process of experimentation and result. Think about that. The attempt to unify all of these nations into a financial and monetary policy whole is designed quickly by fallible people. The system complications involved in unifying all of these nations under one monetary policy is almost an impossibility. And we've seen this in the results. The Italian economy has not grown since the advent of the EU. I mean, of the EMU. Period. It hasn't grown. The Italians know this. The most popular party in Italy right now, the Grio's, I forget the name of it in Italian. I have to go back to Italy to remember. Wants to bring back the lira. This is an inescapable problem for the EMU, and by default, the EU. So the question you have is twofold. Well, just as a side, all the new EU members. I remember I wrote about this long article about this a few years ago. What was going to be the main result of the various crises, the Greek debt crisis, and how it was handled by the Europeans? And my answer was, it's going to completely block any further expansion of the euro. And I think that's definitely true. The original purpose, the original goal, the original plan was for everyone who joins the EU to then proceed by logical, monitored fashion to join the European Monetary Union. I don't think there's any chance that the Poles or the Hungarians or the Romanians are going to join the euro. So it's already been stopped. as far as a uniform, the ever closer union. So the Italians are now looking, and if the vote, there's a monumental vote coming up in December on whether to reform the Constitution. I believe Matteo Renzi's government wants to pass it. I'm not exactly sure in detail what it plans to do, but it will permit them to reform the economy, which hopefully will have them, supposedly stay within the European Union and have a better performance. If that's rejected, he said he'll resign. The government will fall. The most popular party in polls, of course, no one can put to the test. These are just polls. Is Beppe Grillo's party, which says we need to get rid of the euro and bring back the lira. There's zero leeway within the European Union and the EMU to remain a member of the EU and re-adopt your own national currency. Now, the Poles have it, the Hungarians have it, the Romanians have it. Who else is over there? I must have missed somebody. But the Bulgarians, they have it. But that's because they were supposed to be joining the EMU. Clearly they're not going to, but that's another story. There's no way, logically, at least as far as the politicians go, to permit the Italians to leave. So this is where the political crux comes down. How do you handle a departure so that you prevent any other disaffected members from leaving? That's a question which you don't have the answer to. I think, and this is now the topic in Europe, in European chancelleries, in the ministries, in Germany, under Merkel's government, and everywhere else. The French, I believe, have an election next year. Hollande is not in very good shape. Sarkozy is running, and I believe Marine Le Pen is running. I believe Marine Le Pen would have the French leave the euro. I don't know if she wants them to leave the European Union. Sarkozy, I'm not sure he is a European Unionist, so I would assume that he would stay in both. Anyway, the question being discussed right now is the political question. After all, Britain's interest is obvious. Let us go. Let's keep the freest trade possible. There isn't a lot of discussion about Britain's interest in this. They've said they want to go. Theresa May's government's going to leave. What are the terms? They want to keep as much access and as free as trade as possible. There isn't a lot of complications on the British side. It's not true on the European side. They're weighing politics, its effect on the European Union, and more importantly, the EMU. They're not talking about it, but I think that's even more important. How to handle the British vote. There is certainly one set of parties, and you hear more about this more than anything else. This is sort of the populist view, I suppose, in the European view, but it's a populist view which is populist amongst maybe half the population. If the vote I can't speak for Germany, because my guess is Germany has benefited more than anyone else from the euro, and the reason is simple. Because Germany is an exporting nation, 50% of its GDP is tied to exports. And what has been the result of German membership in the European Union, and particularly the EMU? It has kept Germany's national currency, the euro, cheaper by far than it would have been otherwise. Period. If Germany still had the mark, it would be far more valuable and their products would be far more expensive everywhere around the world than membership of the euro. So for Germany, it's been almost an unalloyed good. Remember, the euro is the national currency of Germany. Okay, that is not true for everybody else. It's not true for the Italians, it's not true for the French, not to the same degree. Other countries have benefited, but primarily there's a beneficiary class from the euro, and there is a debtor class, meaning it hasn't done them any good. So when the Europeans consider what to do, how to approach the British exit. Now, they can be very, very harsh. They could. I don't think they will, but they could. They could essentially make access to the European markets punitive. Of course, the British would turn around and do the same thing. And then both people would be poorer for it. And the only reason to do that would be if the perception was, no proof, perception, that this sort of draconian, named for a Greek lawgiver, maybe 800 BC, draconian response would prevent others. Well, what can we assume from that? One, it would be seen throughout Europe as a diktat from Germany. And with all of the emotional baggage that carries. And would it work? I think any estimate, even on the part of adamant Europhiles, would be that it would not work. If that was the approach, and at the end of the day, 2 years from now, the Italian economy is no better. The French economy will be straitjacketed by the euro. Does anyone really think that that type of punitive action against Britain would dissuade the Italians from leaving or from abandoning the euro? Perhaps the same is true of the French. So even if the emotional response is such that it will mandate that people are quiet. Another thing is true. I don't think that the electorates in all of the European countries are so adamantly Europhile as are the bureaucrats, and there are different classes here, and they're politicians. So I don't think you're going to get that hardline approach in the end out of the Europeans. It will not work. In fact, I think it would be detrimental, because if that is seen, and it will necessarily be seen as enforced by and from Germany, then that will only, I believe, harden and excite the opposition to this type of policy. The Greeks can essentially be, and I'm not going to make an argument one way or the other. I've written about this many times about who's at fault in the Greek debacle. Okay, but Greece can be bullied. Small country, very little economy, basically, and it can be bullied without any doubt. That will not work with the Italians. It won't work with the French. It will not work. So any sense that Germany is trying to bully the Brits, which won't work either, will resound very badly throughout the continent. And so I think from a political point of view, that this realization, as unpalatable as it may be to the Europhile rulers of many of these countries, the logic is inescapable. So this also, to bring this to conclusion, this also, I think, is reflected in the chart that we're looking at here. In the end, the negotiations between Theresa May's government and I don't know who's conducting it on the European side, but they are taking their orders from Paris and from Berlin, perhaps to some degree from Rome. That negotiation will be far more amicable. I don't know if the rhetoric's going to be amicable, but the terms will be amicable for a very simple reason, two reasons. Economics is all for as free a trade as possible. Politically, they're going to realize that, one, they already know this, but nobody admitted that the EU must change. The EMU must change somehow. You cannot impoverish countries and expect them to put up with it forever. You can enforce your will on Greece. You will not be able to do that long run in Italy or in France. So the political side will, I think, move to the same conclusion. Where the economic side already resides. To maintain the union, to maintain the EMU, they are going to have to figure a way to let the different national cultures, as expressed in their national economies, operate. And the antithesis of that is a hardline policy from Berlin and Paris. So that's why we have, one of the other reasons why we have the much stronger British economy at the moment, as depicted in the FTSE. Okay, folks, I thank you very much for attending. I hope this was useful, interesting, if not humorous. I'll try and come up with some new stories one of these days, but I'm not sure I'll be able to. I will put my email address in there. If anyone has any questions or comments, please let me know. If anyone has any topics that they would like me to cover, I'll be glad to do that as well. I'll see you all next week, next Monday. Thank you very much for attending. Everyone take care.